Every few years, people ask for the same secret. Warren, what's the one investment that the IRS can't touch and that still wins in a crazy world like 2026? They want a ticker symbol. They want a loophole. What they actually need is something much simpler and much harder, an investment in themselves. If you told me I had to give up every stock, every bond, every piece of real estate I own, but I could keep one asset, I wouldn't hesitate. I'd keep my own abilities. Because they are the one investment the IRS can't touch, that inflation can't erode away, and that no market crash can wipe out. And in 2026, with noisy markets, AI headlines, and job instability, that's more important than ever. Let me explain. For years, I've said a version of the same line. The best investment by far is anything that develops yourself, and it's not taxed at all. At our 2022 Berkshire meeting, I put it this way: the abilities you possess cannot be taken away from you. They cannot be diminished by inflation. The best investment you can make is in yourself, and it is not subject to taxes. Think about what that really means when you learn a new high-value skill. Become a dramatically better communicator. Build judgment through reading and experience. You have increased your earning power. You've raised the dividend your mind and hands can produce for the rest of your life. And unlike every financial asset you know, there is no capital gains tax when your skills become more valuable. There is no wealth tax on the extra judgment you accumulate. There is no inflation tax on the fact that you now solve bigger problems than you did 5 years ago. The government can tax the income that flows out of your abilities, but the growth in those abilities themselves, going from average to very good to excellent, isn't taxed. That compounding happens inside the asset. You, by contrast, look at everything else people obsess over in 2026. Stocks can double, and then you owe capital gains tax when you sell. They can also be cut in half in a bear market. Real estate can rise, but you face property taxes every year, transaction costs when you buy and sell, and tax on gains. Gold or crypto don't produce anything. Their return depends entirely on someone paying you more later, and they still face taxes and policy risk. I like stocks. I like owning pieces of great businesses, but if you're ranking investments by structural advantage, your own skills and character sit at the top. They compound. They can't be confiscated by a bear market. Their internal growth is tax-free and inflation resistant. That's why I call them the best investment by far. In 2026, people are worried about inflation, and they should be. Many economic outlooks see inflation running above pre-2020 levels, often in the 3-4% range, with plenty of uncertainty around energy, rents, and health care. Cash in the bank after tax often fails to keep up with that. Bonds struggle if rates or inflation expectations move again. So how do you protect yourself? People expect me to say, buy this sector or load up on that commodity. I've said something much more boring and much more powerful. The best way to protect against inflation is your own personal earning power. If you do something valuable and good for society, it doesn't matter what the US dollar does. In other words, be exceptionally good at something people truly need. Offer a product or service that delivers such value that others are happy to pay you more over time. When inflation goes up, a strong business with pricing power can raise prices. A strong person with scarce skills and integrity can raise their own price, their wages, their consulting rate, their share of profits. Your human capital, your skills, your reputation, your ability to solve valuable problems is an asset whose earnings can grow faster than the price of groceries and rent. That's not true for a savings account at 1-2%. And it's not just inflation. Look at what else you're facing in 2026. Noisy markets with high valuations in some areas and scary headlines in others. AI disruption, entire categories of work being reshaped or automated. Job instability as industries reorganize and businesses try to cut costs. In that world, being average at a generic job description is a fragile strategy. Being very good at something hard to replace is a hedge that beats any stock. That's why I keep coming back to the same message. The best investment by far is anything that develops yourself, and it's not taxed at all. They can't be inflated away from you. Before you worry about the S&P's next 10%, worry about whether your own earning power is compounding at all. People push back and say, come on, Warren, surely a great stock can beat investing in myself. Look at the math. If you're in your 20s, 30s, or 40s in 2026, and you increase your earning power by 20-50% over the next 15 years through new skills and better communication, maintain that gap for decades. Save and invest a portion of that higher income. The lifetime impact dwarfs the difference between a 7% and a 9% portfolio return. A good stock might double once. A good skill can pay you more every single year for 30, 40 years. And remember, your salary or business income rises with your skill. Each raise or bigger client is partly a return on your self-investment. That return is not directly taxed the way a capital gain is. Only the income it throws off is taxed, and you'd pay that tax no matter what. On top of that, a better you tends to make better investing decisions. You read more. You panic less. You understand businesses more deeply. So not only does your human capital beat most stocks, it also improves your performance with the stocks you do buy. That's why if you force me to choose, I'll say every time, start with yourself. Now let's make this concrete. If you're watching this and saying, fine, I get it, but what do I actually do differently in 2026? Here's the plan. One deep and one high value skill, not 5 different skills. One to start. Ask yourself 3 questions. What skill sits close to what I already do, but pays much more when done at a high level? What skill is likely to still be valuable in a world with AI and automation? Where do my interests and the market's needs overlap? For some of you, that might be advanced data analysis or software engineering, sales and negotiation, actually bringing in revenue, a medical or technical specialty, a skilled trade that's in chronic shortage. The exact choice is less important than the depth. The market pays a lot more for the top 10, 20% than it does for the 50th percentile. Make a 3-5-year commitment. Every quarter, I will be demonstrably better at this one skill, measured by projects completed, problems solved, or responsibility earned. Treat that like a capital expenditure plan for a business. You are upgrading your main machine too. Improve your communication if you want a secret multiplier. Here it is, communication. I've told students that improving your ability to communicate both in writing and speaking can increase your value by 50% or more over a career. Why? Great ideas die in people's heads if they can't explain them. The people who can make others understand, decide, and act are the ones who move up. So your self-investment plan in 2026 should absolutely include reading good writing and paying attention to structure and clarity. Practicing explaining complex ideas simply to colleagues in emails and presentations, asking for feedback and actually using it. The tax on that improvement, 0. The payoff over decades, enormous. 3, build a reputation for reliability and integrity. There is one asset markets often ignore and life never does. Your reputation, when people ask about my success, they focus on numbers. What they should focus on is that for decades I tried to do business in a way where people knew I would keep my word. I avoided partners in deals that required me to be clever instead of honest. I could make decisions quickly because I didn't have to remember what I'd told everyone. I've said many times, it takes 20 years to build a reputation and 5 minutes to ruin it. In 2026, with social media, AI, and everything moving at light speed, this is more true than ever. You invest in your reputation by doing what you say you'll do every time. Admitting mistakes quickly and fixing them. Refusing to cut ethical corners even when everyone else does it. Over time, that creates trust capital. You get better job offers. You get referred clients. People are willing to back your ideas and ventures. The IRS doesn't have a line item for trust on your return, but it might be the single biggest factor in your long-term net worth. This doesn't mean you ignore stocks, funds, or retirement accounts. It means you put them in the right order. Here's how I'd frame it if I were starting over today. First, invest in yourself until your earning power is clearly on an upward slope through skills, communication, and reputation. Second, live below your means so you have a steady surplus to invest each month. Third, invest that surplus in simple, low-cost vehicles like a broad index fund rather than chasing hot tips. Your stock portfolio becomes the output of your self-investment, not the substitute for it. The good news is markets can be overvalued or undervalued. Presidents can help or hurt. Inflation can be 2% or 6%, but if year after year you quietly upgrade your abilities and character, you're building an asset that is inflation-resistant, policy-resistant, crash-resistant. And the IRS will never send you a bill for the increase in your competence. That's the one investment they can't touch. And that's why in 2026 it still beats every stock you can name.